Hey, what's up, stock compounders? Brad here. So today I decided to do a little experiment, okay? YouTube is one of the largest search engines in the world. And I was curious, if someone were searching, what should I invest in? What stocks should I invest in 2020? What kind of results are coming up? So I decided to search that. What stocks to invest in 2020? And the number one video that came up was a video by Charlie Chang. He's got 122,000 subscribers. And the name of the video was The Top 6 Stocks to Buy in August 2020. And in parentheses, he put high growth, okay? So, let's take a look at these 6 stocks and see how they measure up against some of the screening tools that I use to indicate whether or not a stock is worth diving deeper into. So number one on the list, and I don't think this is in order of how excited he is about these companies. It's just a random order of 6 companies that he's buying in August. The first one is Best Buy, ticker BBY. I was surprised to see Best Buy on the list. I used to go to Best Buy growing up to buy, the latest CDs, maybe a phone, that kind of thing. I figured nobody really goes to Best Buy anymore, but I was surprised to see growth of Best Buy's online sales is pretty strong recently. So I dug into some of the numbers. Earnings yield around 6%, pretty low. That strikes me as a little bit of an expensive stock. The return on invested capital, which is a measure of how good a business is over the long term, was pretty impressive, 20.7%. So return on invested capital over my kind of 20%, where I like to see it, over 20%, and it checked that box. It's actually in the magic formula for stocks over $2 billion in market cap. So in the entire universe of mid-cap and large-cap U.S. stocks, Best Buy is in the top 50 for magic formula stocks. So I was surprised to see that. There's no Value Investors Club write-up recently for Best Buy. There is one super investor who owns it, but it only makes up 0.1% of their portfolio. So not a very high conviction bet for that super investor. So, based on the earnings yield, based on the lack of super investor interest, I'm going to take a pass on Best Buy. The number 2 stock on the list, Tencent. Now, this is a holding company in China. I couldn't get a lot of metrics that I get for U.S. companies because it is a foreign company, but there was a Value Investors Club write-up in February of 2020. And the price when that write-up was done was 400 Hong Kong dollars. The current price is 539 Hong Kong dollars. So from February to August, the price went up 35%, which is pretty impressive. It's now around kind of the base case thesis that this Value Investors Club investor had. So the base case, it got to that price. The bull case was 655 Hong Kong dollars, which means, that's another 21% to run. So it's done 35%. Based on this write-up, it's got maybe another 21% of upside. So, I figure based on the recent run in Tencent, it's less interesting to me. And it's hard to analyze using my initial screeners for foreign companies. So, it's interesting. I may look into it at some point, but it's not jumping out at me as something that's screaming to be looked at. So that's Tencent. Number 3, Chipotle, ticker CMG. Chipotle is expensive, 1.3% earnings yield. Price to earnings ratio of 128. Okay. There's quite a bit of super investor interest. Well, there's only 2 super investors, but Bill Ackman owns nearly 12% of the portfolio of his is in Chipotle. So that's a high conviction bet from Bill Ackman, who is a super investor that I respect quite a bit. He did reduce the holding by 1/3 in Q1 of 2020. So, my interpretation of that, and this isn't necessarily true, but perhaps Bill Ackman is looking at Chipotle thinking it's a bit expensive. So that might be the reason he was trimming that position. There was a Value Investors Club write-up, but it was from 3 years ago. And the price 3 years ago for Chipotle was $312 per share. Now it's $1,147, okay, as of, today. So that's a 3.7x growth in 3 years. That's really incredible growth. So, Chipotle, probably a great business. I actually like eating at Chipotle. If I'm on the road, that's one of the places I look for to eat because I know what I'm going to get. I know the price point is very reasonable. I like the food. So when it's a company that I pay money out of my pocket for, I buy their product, that makes me more interested in investing with that company. So I may dig into Chipotle at some point in the future, maybe after another E. coli outbreak or something like that. But it's very expensive right now. So perhaps on the watch list, not digging into it any deeper at the moment. Number 4, Teladoc, ticker TDOC. Now, Teladoc is a really interesting business right now. Virtual doctor's appointments. Who doesn't want that in our current situation of this pandemic? Nobody wants to go visit a hospital right now. So, it's an interesting story. It's a very interesting story. Unfortunately, the company is losing money, right? As a value investor, it is very difficult for me to get excited about a company that is losing money because the percentage of companies that go from money-losing companies to, companies that make money hand over fist, it's very small, okay? I like to see solid earnings from a company before I invest because that can be a very difficult road to go from negative earnings to kind of positive, stable earnings. That's no small feat to kind of cross that chasm. So, there was a short thesis in 2017 for Teladoc at $32 a share. Obviously, a lot, I'm sure, has happened in the last 3 years since that short thesis was written. Now it's at $241 per share. Okay. I certainly wouldn't short. I don't short any companies, but definitely with a story stock like this, I wouldn't even consider shorting it at any price. But Teladoc, potentially if when it starts to make money, could be an interesting one, depending on how things unfold in terms of how people are visiting doctors. I could see a lot more of that migrating to the online space. Number 5, Delta Airlines. I was surprised to see an airline in the top 6 here, especially for high growth companies, right? Delta Airlines, he did mention it was the riskiest stock on the list. I imagine that's simply because of how long it may take for Delta to become profitable again. I think the CEO was talking about how it could be 2 years before Delta is back in the black, before they're earning money again. That's a long time for the fundamentals of a business to turn around. Obviously, Buffett sold out of his Delta position. To me, as a Buffett disciple, as someone who follows the value investment principles and framework, if Buffett is running away from a sector, I don't have a lot of interest in that sector. So I haven't bought any airlines since airlines tanked a few months ago, and I don't plan to. There are 4 super investors who own Delta Airlines. The earnings are just getting destroyed, and they have such a high cash burn, right? It's such a capital-intensive business, being an airline. And, I mean, airlines are going to be around, right? They're going to be around. People are going to be flying, okay? But it's another story to say that the equity positions in those airlines are going to rebound. Monish Pabrai mentioned in one of his interviews and one of his Q&As that he thinks equity is going to be impaired for airlines for multiple years into the future. So I think it's going to be hard to stay with that bet for several years, while it's just going to be a roller coaster ride, I think, and who knows what's going to happen on the other side. Number 6, Disney. I was happy to see Disney on the list. Disney is a company I've been meaning to dig deeper into. Earnings have obviously just gotten smashed with very few people visiting these theme parks. But of course, I believe it's Disney Plus that came out. Verizon, I think, had a deal with Disney Plus. I have a Verizon family plan, and a number of my siblings were like, hey, we got to get Disney Plus. Help us do it, because I'm the account manager for our family plan with Verizon. So I was kind of like, oh, interesting. Disney's got something here that my family members are interested in. Might be worth more of a look there. But that seemed to be very high demand for many, many people, that Disney app. There was a Value Investors Club write-up in November of 2019, which wasn't all that long ago. Feels like an eternity ago, only 9 months ago. That write-up predicted that Disney could reach $300 per share within 4 years. So about 3 years from now, $300. So right now it's 116 as I record this video, 116 per share. So if it got to 300 about 3 years from now, that's a 2.6x in 3 years, which is awesome. I'd take that. I'd take that upside any day of the week. There are 8 super investors who own Disney, so that's more than any others on this list of 6. So Disney, out of all of these, Disney's really the only one that I'd want to dig deeper into. Chipotle on my watch list, I would say. The price has to come down dramatically for Chipotle, but it could. I mean, it was as low as $500 in March, only 4 or 5 months ago. So Chipotle can swing quite dramatically. 500 might still be too expensive for me with Chipotle, but yeah, I just wanted to kind of give my 2 cents on these top 6 stocks that, this is a video that you guys are going to find if you search for what stocks to invest in 2020. And there are a lot of people who are searching for that. Notice I made sure to include invest in the search term, okay? There's a lot of people looking, what stocks should I buy? But, a lot of those people are looking for, the stocks that are going to double in a week. These kind of trader stocks to trade, stocks to gamble on, stocks to speculate on. I was looking for stocks that would turn up with a search around investment, stocks to buy and hold for multiple years. So, you know, it was an interesting list of 6. It was kind of fun to go through it. Let me know if you guys want to see more videos like this, where, you know, I take these really popular videos on YouTube related to one of these hot search terms and kind of break down, you know, are these really stocks to invest in when we look under the hood just a little bit, when I put them under the microscope of my kind of initial stock screening criteria. It was interesting for me. Let me know if it was interesting for you, and I will do more videos like this. Also, let me know if you're buying any of these 6. I mean, Tencent, you know, I'm curious. I've kind of heard Tencent in value investor circles. I don't really know anything about it. Curious if what you know about Tencent, and certainly Disney as well. I want to get to know Disney better. So I will leave it at that, guys, and I will see you in the next video. Take care.